What is going on, traders? This is going to be a quick video. Just want to give you guys an update on what we could potentially be looking at for the rest of this trading week. We're going to go over the SPY, the triple Qs, and then we're going to go over how institutions are still loading up on those VIX calls. Before we start, like, subscribe, comment your thoughts below. Let's get into the video. So right now we're looking at the SPY daily time frame, and as you guys can see, we're right at the top of this rising wedge. Now, I'm not saying that we're going to reject from here. We have been having a hard time today really getting above this level. We've seen a lot of consolidation under this area right here. And so I do think it's very much possible that we do break towards the upside. Now, if we do break towards the upside, I do have a price target of 616. Your key levels in regards to going to the upside is obviously 612. You want to get above 612. We've been having a hard time getting above that level. I believe it was last Friday where we were really having a hard time holding 612 or getting above 612, and not only 612 but just holding above 610. So we're holding above 610, which is a good sign. We want to see a breakout above 612, and then we can start heading towards 616. In regards to the downside, 607, you get below 607, you're looking at a move towards 605. Ultimately, your key level here, guys, the main level you need to worry about if you're bullish or ultimately bullish within the market is 600. As long as you stay above 600, you're pretty good. You get below 600, chances are you're going to break up below that key level of 598. We talk about 598 all the time. You break below 598, that's when things get really ugly. Every time we break below 598, we see a dramatic sell-off. You see it here. Jerome Powell originally sold off the market. We broke below 598. We had it as low as 579 the first time. We did it again. We broke below 598. We had it as low as about 576, which we filled this gap fill. And so every time we break below 598, you see a pretty dramatic pullback towards the downside. So you definitely want to hold that level. We're pretty far from that level, so it's nothing to really worry about right now. But once we start getting close, or if we start getting close to that level, you definitely want to pay attention to that. So right now, not much to talk about. We just consolidated the majority of the day. I mean, you go to the 4 hour time frame and you see it here. It's nothing really to talk about. You close below that trend level, so that just shows you that this trend is very strong, that the top of this rising wedge is very important. I know a lot of you don't believe in trend lines and patterns, but as you guys can see, we've rejected the top of this multiple times. So definitely want to take it serious. You break above this, then chances are you're heading towards 616. All right. So triple Qs. Triple Qs, you're pretty much looking at the same scenario. I will say this much that the NQ compared to the SPY and even the ES looks a lot better. We'll talk about the NQ in a bit. But triple Qs right now, you obviously just want to break above these guys right here. This is where Jerome Powell originally sold off the market. So you definitely want to break above at 539. We'll say 540, which is your psych level. You break above 540, you're heading towards 543, 544. Now, if we're talking about some, if we're being optimistic in regards to all-time highs, we can head as high as about the 550s on the triple Qs. And the reason why I say 550s is because we're basically heading towards the top of this rising wedge. Now, am I guaranteeing this? No, I'm just saying that it's very much possible if we continue towards the upside. So you want to see 540 get broken first, which is your first key level, your psych level. And then if you start breaking above that key level, then chances are you're heading towards that 544, 545 target on the triple Qs. In regards to the downside, 538, we've been having I wouldn't say a hard time breaking below it, but obviously, if you're bearish, you want to see a move below 538. You break below 538, then you're heading towards your psych level of 535, right? And ultimately, your key level here, and we're nowhere near that level, is 515. We talk about this level all the time. It's right here, not right here, sorry. 515, 518 is your first key level, and then 518. So you get below 515, which is these guys right here. You're pretty much breaking below this rising wedge, which is a bearish sign. As you guys can see, we've been holding this pattern for quite some time. Bulls have stepped in every time we hit the bottom of this pattern. So if you start breaking below this, then that's where things can get really ugly. And remember, there is a gap all the way at 592. So I imagine if you do break below 515 once again, you're going to start heading towards that gap fill all the way at 492. We'll talk about that if we ever get close to that point. But overall, things do look good for potential upside for now, right? NQ. So NQ looks fine. Okay, NQ doesn't look bad or anything. It's just consolidating within this range. Not much to talk about here. You just really consolidated all day. I mean, it goes without saying. You go to the 4 hour time frame, as you guys can see. You've been doing this since like last Thursday, just bouncing back and forth within this range. So NQ obviously needs to get above 22,300. We saw a glimmer of that. If we manage to hold above 22,300, which is right where Jerome Powell originally sold out the market, then we could start looking at a move towards 22,500. And if we're being really crazy, if we're being really optimistic, we could start talking about moves all the way towards 23,000, which is really at the top of this rising wedge pattern. Now, in regards to downside, 22,000. 22,080 is your first key level, but overall, ultimately, the main level of all levels that you really want to worry about here is 22,000. You break below 22,000, that's where things can get pretty worrisome for the NQ. And after that, you're looking at a move towards 22,000, not 22,000, 21,700. You break below 21,700, you're heading towards 21,500. And after that, if you start breaking below 21,500, that's where things can get really scary. I will say there's a lot of bulls in this area, so it's going to take some really crazy news for this to happen. All right, really crazy news for us to really break below this area here. Do I think it's going to happen? I do, but ultimately, I don't think it's going to happen overnight. Obviously, I don't think it's going to be a quick move. I think it's going to take a lot for us to really break below this area right here because bulls are very much present in this area. So that's what you're looking for if you're talking about downside on the NQ. All right, so let's talk about how institutions are loading up calls on the VIX. So today, I think I think this is the most calls I've seen on a VIX in one day. We talked about this in the last video on how institutions are just loading up VIX calls for the month of March. So we click on this spike here, and quant data link will be in the description below if you want access to this type of information on what institutions are loading up on, whether it's the SPY, the triple Qs, if you want to see if they're loading up puts, calls, or it can be your favorite stock. Regardless, definitely want to check out quant data. Link will be in the description below. So here, for example, our first example here is we got VIX calls for October 22nd, 22 calls for October 22nd. Pretty far away, right? But then you get a little bit closer, and what's ironic about these dates is that this is where the next Fed meeting is, or close to where the next Fed meeting is. We have our next Fed meeting all the way in March. Now, it doesn't necessarily mean that the VIX has to wait till March to spike up. It can happen tomorrow. I mean, Wednesday we do have FOMC minutes, so it can happen that day. But right here, you see that institutions loaded up VIX calls for March 18th with a strike price of 17.5, which is actually not hard to get to. I mean, we saw the VIX spike up to 16 today. So I don't think 17.5 is something that needs to wait till March. So I wouldn't be surprised this happens much sooner, but you have a strike price of 17.5. You have calls. They were loaded up at 15.62, somewhere around that range, 15.6. And then you scroll over and you see the premiums are 40K, 31K, 30K, so on and so forth. The sentiment is bullish. And then you see the institutions that are loading up here. You click on this other spike here, another spike here, right? And you're just seeing this across the board, and this all happened today, like all in one day, guys. So we scroll back over and we see that institutions loaded up March 18th, 25 calls as well, with a premium of 5.55 million. 24 calls, 25 calls, 25 calls, and then you got like 70 calls here. That's pretty insane, but those premiums are pretty low, so I won't worry about those. But yeah, very interesting on just the amount of calls that's been loading up on the VIX lately, especially when I talk about the VIX in the last video, actually last couple of videos, multiple times I said we're very illiquid at that 25 level. So it kind of adds up, right? It kind of adds up to the point that 25 is very much possible for the VIX. I mean, whether you believe it or not, we're pretty illiquid up here. So we mark it out here, and this guy right here, this area right about here, we're very. What am I doing? We're very illiquid in this area around 25, and we can head much higher than that. I mean, we could start talking about moves all the way to 27, but right here, as you guys can see, we rejected here multiple times. This is a fair value gap in this area right here, so it does add up. It does make sense that it's very much possible that we can see a bounce back towards the upside on the VIX and liquidate this area all the way towards 25. And obviously, if the VIX spikes towards the upside, then the market will most likely do the opposite or the inverse of that. So definitely want to pay attention to this. I'm not saying, trade in fear or anything like that, but considering how the market is moving, we're seeing the SPY pump, we're seeing triple Qs pump, but we're not really seeing anything else pump. I mean, we look at NVIDIA, right? I mean, we saw the SPY pump towards close, but NVIDIA was dropping. right? Nvidia went as high as about 143 and just pretty much gave up, right? And we always talk about how, gaps have strong support and resistance, and that's exactly what happened. We hit that gap fill, we filled the gap, right? These bears stepped in, these cocaine bears, these psychopaths, right? These bears here, these bears here, these bears here. And like I said, you don't need a value profile to see just how present or how strong bears are in a certain area, or even bulls, depending on the direction you're looking at. But bears are very much strong in these areas. You got, in bearish engulfing candle here, bearish engulfing candle here, multiple bearish candles here. So once we got within this range, we saw Nvidia pretty much sell off. Now, is it a significant sell off? Is it something to worry about? I don't think so just yet. But what I will say is the fact that we broke below 140 can be concerning. If we start giving up 138, that's even more concerning. We can start looking at a move towards 135, which is not anything, drastic or anything to worry about if we do hit 135. But as long as we stay below 140, I would definitely be cautious with Nvidia, especially again, considering where these bears are. And remember, I've said this multiple times. Every time we get above 140 on Nvidia, bear step in, right? I showed you guys on the monthly chart. Feel free to look it up if you're new on the channel, but look at the Nvidia monthly chart. Every time, you get above 140, you get these massive bearish wicks, right? And you see it over and over. And as you guys can see, all started with this candle right here. Every time you get above 140, bear step in, bear step in, bear step in. I mean, you see it multiple times over and over. And mind you, once again, this is the monthly chart, but if you go back to the daily chart right here, remember, Nvidia made new highs right here at around 153. And what happened? Bear stepped in, and this was given up all in one day. So this happened all in one day. Nvidia went as high as 153, made new highs. I'm sure everybody was excited, and then almost immediately it gave it all back and broke right back below 140. So Nvidia's having a really hard time holding above 140. So like I said in the last video, if Nvidia gets above 140 and you're in calls, don't be surprised you wake up at a Diddy party. All right. So that's all I'm saying. Okay. Maybe you're into that stuff, but it's very important to take this serious because again, these bears are very, very present. They are making their presence known. Nvidia is going to need either some crazy individual news or the market is going to need some crazy news overall. So you definitely want to take this serious. Every time Nvidia gets above 140, sells off. All right. So once again, you're just not seeing the reaction you want to get across the market, especially with the Mag 7. I mean, even Meta, right? SPY pumped towards the upside towards close. Q's pumped towards the upside towards close. And granted, I mean, we're pretty much in the same range, but majority of the day you saw Meta selling off, right? And granted, Meta did reclaim this support here. I said if Meta just so happens to close below 710, you can see a pretty dramatic move back towards the downside and you can start heading back below 600. So as long as Meta is above 700, you're pretty good. I would argue that this is a bearish engulfing candle, but the fact that this wick is right here doesn't make me too comfortable with it. So I do imagine that Meta could bounce from here and maybe you get a bullish candle and possibly this bearish engulfing candle plays out within the next few days. But right now, I'm not convinced about this, but again, 710 is your key level. We failed to close below that, so it's very much possible Meta sees a bounce from here. But again, um, I see a lot of you are like, don't worry, you're worrying too much and all this other stuff. It's not necessarily worried, it's just me paying attention to everything. When you're paying attention to everything, you're like, well, the SPY is pumping, the triple Qs is pumping, but you're not seeing it across the board. I mean, Apple went crazy, right? But you're just not seeing that reaction across the board. And that's what I really want to see to be really convinced about this. And again, maybe I'm speaking too some, right? I mean, maybe SPY just really needs to get above 612, and then that's when everything else starts to follow. But right now, um, not too convinced about this move, not too optimistic about this move. By all means, trade it, enjoy it. But right now, things are a little bit shaky. And once again, institutions continue to load up on the VIX. Another thing that happened today, and I got this information from Quant Data once again, is gas went up. Natural gas is going up, or as far as the stock goes, right? All in one day, this Boyle, we look at Boyle here, all in one day, this went from 73 to 84 in one day. Now, if you're new and maybe you don't know what this means, this could mean a lot of things. The cost of energy could be going up, which I mean would go without saying here. The cost of energy could be going up, and this could be a sign that inflation is indeed going up. When you're talking about natural gas is going up, this could be a sign that inflation is rising. And I've said this multiple times in the Discord. I think what's going to cause the market to really drop or even correct or crash, whatever word you want to use, is going to be inflation. Okay. The market cares about inflation. I think the market is pretty much immune to tariffs, so I don't think that's going to be a worry. You may see a little flash crash here and there, but I don't think that's going to be the thing that really sends the market over the edge. But when you have, natural gas prices or the natural gas stock making such a significant move, a $10 move in one day, that can be concerning. Okay, that can be very, very concerning. And it's been climbing ever since. And it's been climbing since like January or the end of February. So not the end, the beginning of February. Sorry. So it's been climbing ever since. So this could be a sign that inflation is indeed climbing at a rapid pace, and this could be a problem for the overall economy. I sound like an NPC. I'm like malfunctioning over here, but overall, this could be concerning. Okay, plain and simple, this can be concerning. Okay, and again, I got this information from Quant Data. Feel free to check out the link in the description below. And so overall, I'm not gonna go too deep into stocks and everything because nothing really happened today. I mean, you got a pump towards close, but ultimately you just ended up right in the same area as before. I just want to give you guys an update that institutions, once again, they're loading up on those VIX calls. You got natural gas stocks rising and pumping all in one day, right? You're at very key resistance on the SPY and the triple Qs, and it's very much possible you break out of here. It's very much possible. You got Nvidia doing what I've been saying Nvidia has been doing for quite some time. It just cannot hold above 140. Okay, maybe it happens for earnings, maybe it happens heading into its earnings, maybe they start pricing in earnings, but again, you just cannot hold above 140 once again. And it is the beginning of the week. Maybe it's just too early to say, but yeah, you definitely want to pay attention to Nvidia. Um, it's not really dragging the market down. I mean, you're seeing the market kind of react without it, but yeah, that's definitely something you want to pay attention to. If Nvidia can manage to get above 140 and actually hold for more than a day, then we can talk. Okay. Bitcoin, you're seeing Bitcoin drop. Now I will say that Bitcoin has found support here, and there's very much there's a lot of bulls in this area. Okay, there's a lot of bulls in this area. Okay, you go to the daily time frame, and bulls are just extremely present. So they clearly don't want this thing to drop. Okay. They do not want Bitcoin to drop. Um, Bitcoin has just every time this thing drops, these bulls, I mean, you see it across the board. These bullish wicks all over the place just continue to step in. These bulls continue to step in. They're turning into a whole different animal at this point. So they're trying their best not to, have Bitcoin drop. And like I've said before, I said this in another videos. People have been asking, well, why is Bitcoin not drop? I mean, not like dropping, but why is Bitcoin not moving? Okay, why is Bitcoin just staying still or just consolidating in this area? And if Bitcoin is a lead indicator of the market, why is the market not dropping? And it's simply because Bitcoin reacts to inflation. Okay, Bitcoin likes the decrease in inflation. Okay, right now we're in stagflation. And stagflation isn't even a good thing, in my opinion. Okay, maybe you have a different opinion, but stagflation is just not a good thing, guys. It's slow growth. More people are being unemployed. It's still it doesn't take away inflation. It's just saying inflation is just slowing down, but it's still rising. Okay, overall, and Bitcoin doesn't like that. Okay, so right now you're just at a time of uncertainty when it comes to Bitcoin until we get confirmation that hey, inflation is like actually decreasing or just dropping in general, Bitcoin is just going to continue to do this. Okay, especially as long as we're so-called in stagflation. All right, so just a little tip there, but overall, not much to talk about as long as Bitcoin stays between 92K and 99K. Once it breaks below either one, whether it breaks below 92K or breaks above 99K, then we can start talking. But otherwise, pretty boring movement. I would argue that this could be a sign of what's to come, but the fact that these bulls keep stepping in is really tough to say. So, you guys let me know what you think in the comments below. Discord link is in the description below. It looks like it's going to be a pretty slow week. We do have FOMC minutes come Wednesday. Trump was supposed to speak today. I don't know if they got canceled or moved, or maybe he's speaking later tonight. But overall, It looks like it's going to be a pretty interesting week. I wouldn't say it's going to be crazy because we don't have really any major earnings names. But next week is going to be the week of all weeks. So you definitely want to pay attention to that. The next 2 weeks, actually. So you definitely want to pay attention to that. Let me know what you guys